All right, ladies and gentlemen, hello everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, ladies and gentlemen, the 5th, if I'm not mistaken, the 5th of June. Yep, that's correct, the 5th of June, 2025. So I hope you're all having a wonderful week so far, and kind of 1.5 day to go left. So, well, actually, depends on where you are, of course. But look, I wanted to quickly pick up on one piece of information that's coming out actually tomorrow. I already did pick up on a few pieces of information that were coming out already this week, so you can check out the videos on YouTube. But yeah, NFPs tomorrow. Everybody's waiting for those. I mean, in general, this has been another jobs week for the U.S. We had the JOLTS, we had the ADP yesterday, and yep, we're waiting now for the NFP. But before we all jump into all that stuff, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm gonna fix my eye. I think something has fallen into my eye, but anyway, look. Also, before we jump into the charts, the usual mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, actually, I'm gonna pick up on USD CAD in a bit, but first, the economic calendar. So, as you know, today we're going to be getting the interest rate decision from the ECB. So, if you are trading something euro related, then yeah, keep your eyes on that. And if you are trading, let's say Euro USD, then you will keep an eye on today and on tomorrow's data, and that's what I'm saying. That tomorrow we're getting the non-farm payroll number. So the number is expected to go down. And okay, that's going to be very interesting to see, to be honest, because recently we have been seeing somewhat of a slowdown. And let's say if it comes out even below the 177 territory, well, actually, in interesting, in general, if it comes out lower, let's say than 177, and again, depending on where we're going to be, what kind of an adjustment we will get, because don't forget that yes, the actual number matters, but also the adjustment matters as well. So for example, if it gets adjusted to somewhere close enough to this, that's fine. But the thing, then we're watching the actual number. Then we're looking at if it's going to come out below the adjusted number, then we'll have a nice, beautiful, gradual decline here since April data. Yes, since March data, because we're in April here. We got the March figures. So March, April, and now we're going to be getting the May numbers. So like I said, if we see the adjustment kind of staying somewhere maybe around here, that's okay. That's one thing. If we see, but then we look at the actual figure. If the actual number is lower than the adjusted number, then yeah, I mean, like I said, we'll have ourselves now a three readings in a row when we are seeing like a bit of a decline here, or actually two readings when we're getting a decline. It's just we're starting from that one. So anyway, you understood me. But basically, another thing is that it's interesting to see that we keep on getting these projections to the downside. And okay, if we jump into Tuesday, for example, we got the job openings, and those came out much better than the forecast. We had also a lower number, but it came out better than the forecast, so that was great. Now, ADP numbers came out on Wednesday, yesterday, and those were not really something that the market really enjoyed as well, because they came out at 37,000. So the previous number was at 60K. It came out at 37,000. Well, and yeah, the market didn't really like that, and we saw a little bit of negativity, I would say. And we saw the Dow kind of drifting lower. Nasdaq was still in positive territory, but probably mainly driven by tech and Nvidia. The S&P was kind of flat, so yeah, it wasn't a very good day here in terms of trading. Now, coming back to this situation here, Oh, excuse me, my voice is going down a little bit. Coming back to this situation here with ADP, look, I do understand that some people like to gauge ADP to NFP, the non-farm payrolls, but honestly, don't do that because it has been losing its correlation, and it never kind of really did so that much, So that's why just look at it from the separate, like from the separate perspective. And like I said, look at it from the perspective the way that I kind of told you. Look at the numbers. Yes, if it's going to come out lower, let's say, yes, the forecast is already to the downside, but I think the market is already kind of pricing that in, that maybe we're not going to get a super great result. But what's interesting going to be, like I said, at least for me, that if we're going to get, let's say, a lower number, will it be lower than the adjusted figure? Because, and if suddenly they adjust the figure even more to the downside, and if it's going to come out even lower than the adjusted, I mean, that's, for me, that's the problem. But if the actual number comes out higher than the adjusted, maybe, the market could see this as a positive in a way. In general, anything above this number here or above whatever number is going to happen here after the adjustment, I think that the market will take it as a positive still. So yes, the times are not the best right now because we're still having these worries with tariffs and all that stuff. But still, like, it's like a little, light in the end of the tunnel, and maybe that could, help drive the stock market higher here. Because looking at the cash index here of the S&P 500, you'll see that we are testing the upper side of this little range, testing the upper side of this little range where we are currently trading in, and we are stuck in between the 5,786 roughly, with the end on the downside, on the upside 5,973. That's on the S&P. If we can clear this one, look at this. I mean, 6,147 on the cash index here. That's the current all-time high. So that's my next target in a way. If we do clearly clear, if I can be clear enough about that. We clear here in this area. We stay above this on the daily daily candle. The body of the daily candle remains above this area. Then yes, I'm going to continue targeting the upside. The Dow Jones Industrial Average is still struggling. Let me get rid of this upside line. It's actually no longer needed. It was working initially good, but now I think it's time for it to go. So yes, we removed it, and yeah, we're keeping an eye on a few areas here. For the upside, it's kind of pretty straightforward. To be honest, I need to push above the 42,873 territory, or let's round it up here a little bit, 42,900. Nice good push above that could attract a few more buyers into the game. Yes, Dow is a little bit further away from the all-time highs, but still doable. Still doable. For the downside, actually, I need to see a drop not below this highlighted zone right here. No, but actually, I would prefer to wait for a drop somewhere below the EMAs here and kind of then consider some lower areas. NASDAQ 100, this one's a good one actually. Let me get rid of this. This is something else I was analyzing here. But if we do get rid of, well, we already cleared a key area of resistance, this 21,500 territory, which I spoke about on Monday. We cleared it. That's fine. What's next? Well, the thing is that on May, this is the highest point of May right here, and we have approached that area, the 21,805-ish. If we can clear this one, yes, we're getting closer and closer to the current all-time high, which on the cash index here on my chart is roughly around the 22,241 zone. So this is a good target. In a way, I think that NASDAQ, it could eventually travel there. Hey, why not to consider that, of course, but at the moment, again, let's go slowly. Let's keep an eye on the NFP figures, and yeah, we'll go from there. But today we still have to go through today. Today, by the way, in a few, like I said, minutes, we're going to be getting the interest rate decision, but probably the more interesting part will be the press conference. Yep, we're going to try to see how much how much are the ECBs willing to, or how many more times the ECB is willing to go and cut rates, because we're getting closer to 2%, and I think the next one would be dropping. It would be pushing the rate below 2%. So at the moment it's 2.15 in comparison with the US 4.5. So yeah, but from the US side, initial and continuous jobless claims are coming out, so something to keep in mind for you. And that's kind of it in terms of major economic data sets. Yes, so initial and continuous jobless claims. I think that's something you can keep an eye on the trade balance, but that's like something just additionally to to kind of support your maybe bullish or bearish scenario. But the main idea, of course, is to keep an eye on the initial and continuous jobless claims right here. So keep your eyes on that, ladies and gentlemen. In terms of the forex pairs, in terms of the which include the U.S. dollar. So the one that I was talking about here, USD CAD. Look, yesterday we had the Bank of Canada with their interest rate decision. They didn't do anything. They kept the rate unchanged at 2.75. So in a way, I think that was already priced in. But we're seeing a little bit of strength here of the Canadian dollar. But I think it's time now for the U.S. to do something and to kind of lead the US dollar, because the US dollar has been on a weaker side, and in terms of this technical picture it looks very much to the downside, to be honest. For me, the upside scenario could come on a break above the 100.40 zone right here, because at the same time we could pop above the 50-day EMA. So coming back to the situation with the USD CAD, yes, there is a chance for this one to drift further south, but again, a confirmation break is needed. But also, I don't want to rush into things. On Friday, we do get some Canadian numbers as well. We get the Canadian job numbers, so keep those in mind as well. So if you are trading something forex tomorrow, then I think USD CAD could be a good option. However, again, you be the judge. You know yourselves better. So, but just because I'm saying that, because the two employment numbers are coming out from US and Canada, so we could see some volatility in USD CAD. The only thing is, please do promise, if you're going to trade that tomorrow, just be careful. Have your stop losses in place, okay? USD JPY very quickly. Again, similarly to DXY, I mean, it's also pointing a little bit more towards the downside, but I need a confirmation break below the 142 territory right here. If I can get that move, amazing. More sellers here could join in. USD CHF, it seems like a copy of DXY, and the same story. I'm kind of leaning a little bit more towards the downside on this one, but for me to consider the upside scenario, yes, a push above the 0.8347 is needed. So, ladies and gentlemen, that's my kind of game plan for everything what is US related for today and tomorrow. So hopefully you found it useful. Ladies and gentlemen, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next time. Bye bye.